Folks, welcome. Welcome to Thursday Night Stock Charts Live. A ton to talk about. We're going to be going over the weekly charts. How are we poised to close out this very, very abbreviated yet very, very volatile week in the stock market? We're going to talk about seasonality. We're going to talk about DELL, NVDA, Costco, Kathie Ark, that company Path, iPath. Very strange happenings over at the ARK Fund. I'm not sure what's going on with her. We're going to be talking about that. We have some headline news today out of New York court system. President Trump found guilty. We're not going to go into politics. We're just going to talk about the sentiment that this will drive into the market. You may agree with it, may disagree with it. It's all good. We got to talk about stocks. We got to talk about business and how it can impact it. So let's begin with welcome. Thanks for being here. Like, subscribe, you know the deal. And let's begin with Dell Computer. Dell Computer closed out. They reported this afternoon, closed out the session at 169.92. Last tick was 138.25. This is a big move for this company. Roughly a $30 move with an anticipated market maker move of $20. I have played zero earnings trades on options this earnings season because of this. Market makers are not getting it right. They're completely off the wall when it comes down with the anticipated market maker moves for these stocks on earnings. I mean, look at Palo Alto Networks, destroyed. Completely missed the mark there. Moving on to, by the way, Dell beat. I don't know what their forward-looking guidance was. I took a quick peek. If somebody knows it, if you could pop it in there, their guidance. I'm not sure why they have this disastrous sell-off here. They beat on top and bottom line. So if anybody has anything that they know of, please share it with the group because I did not see it with, Franklin, thank you. Thank you, sir. Audio's good. So that's Dell. Let's move on to Costco. Costco closed out the session at 815.34. Last tick, 801.16. I'm sure this is within the market maker anticipate. Yeah. So option sellers on the Dell trade lost their shirts. Unless they went 2 standard deviations out. Option sellers on Costco looks like they're going to bank tomorrow on this report. What was the implied volatility? Yeah, decent, very, very decent, 72%. So good trade for those who traded Costco. And I want to talk about this. You know, there are a lot of people that are out there, they call themselves professionals. And I got to tell you, I don't like to pick on Kathie Ark. Rarely do I talk about her anymore. I beat her up a couple of times on her purchases of Tesla recently, in the past year or so, right at the wrong time. And she has a tendency to buy at the wrong time. Kathie, you need a technician on staff because looking at this chart of Path, this was posted by Unusual Whales on the 29th. Yesterday, being the 28th, Kathie Wood of ARK bought 450,000 shares of Path. Today, it dropped 28%. Why did it drop 28%? They reported earnings. I don't know what their earnings were. I don't care. I care about what it looked like before earnings, and it didn't look good. We'll go over that chart in a moment. What I care about is that you bought 450,000 shares of a stock that's under distribution with horrible fundamentals into earnings. Here, take a look at IBD. Investors Business Daily, accumulation distribution, D. Relative strength, garbage. Why would you buy this stock immediately before earnings? What are you trying to prove? That is a psychological thing. She is trying to claw her. She's revenge trading, in my opinion. Revenge trading, which is the last thing that you should do. You should not be buying stocks into a binary event, a major news event. Don't do it. I do not do it. I make a point of it. Never, ever, 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 ever. But she did it. So what was the market telling Kathie before she made this purchase? The shares are broken. They're broken. They put in a double top and they broke down out of this bear flag setup. This is why she needs a technician on staff before she makes these purchases. She's not looking at the charts. I'm convinced of it at this point. She is not looking at the charts. And she's lost a ton of investor money today. If she worked for me, she'd be fired, out on this purchase. This is a cluster F. Shameless. All right, let's move on. Let's say hello to folks. Larry, not receiving any email. Yeah, let me check the email for you, Larry. Dell's operating income declined 14. I see. Thank you. I did not see that in the headline. Or on Thinkorswim, I should say, not the headlines. Trump news going to be bad for the market. We'll talk about that in a moment. I'm trying to avoid getting into politics and all that. Okay, one of my favorite charts of the day. I retweeted this because I thought this is such a good thing to happen to this country. My tweet out was, this is the healthiest thing that has happened to America in 50 years. Stop eating processed garbage foods. I never eat this stuff. Never do I eat this stuff. And look at the food prices here. Incredible. Economic data. All Fed heads. We had consumer confidence come out. Consumer confidence beat. That's surprising. We got initial jobless claims today. They came in a little bit hotter than expected. GDP. I thought this was revised down. This is showing a revised up. Oh, I see. Okay, so the actual. All right. So yeah, it was revised down a tick. And tomorrow we get PCE index. Folks, the market can move on this. I think it's going to move in a downward way anyway. We spoke about this quite a bit on Thursday. There's a couple of charts here I'm going to go over, Sunday. There's a couple of charts that we've gone over already on Sunday. We're going to revisit them because I'm trying to drive home a point where Treasury and the Federal Reserve, forget about Congress, they're completely out to lunch, are painting us into a corner. So they're running out of room to make moves here. So on the price action in the equity markets today and on the tick lower on GDP, we saw the probability of an ease move up from 45 to 50%. So still, coin flip whether or not they're going to move in September. Let's refresh this. Unch. All right, price to earnings multiple, Schiller 34.26 relative to the mean at 17.12. Very, very expensive as measured by Schiller, and Buffett indicator strongly overvalued. We are at a 2 standard deviation move. Buckle up, folks. So these are all being reiterated so that nobody forgets that I warned on Sunday night, get ready for a potential sell-off here. I didn't rule out a potential higher high, but I warned of a breakdown on the S&P 500 and the triple Qs last Thursday, that outside reversal bar that had not been negated. It was still out there. We run the risk of retesting prior support and then failing. That's exactly what happened to the S&P 500 yesterday and to the triple Qs today. We had follow through. Now, the Federal Reserve continued this week to roll off debt off of their balance sheet. So that is no bueno for the equity markets, although it's the right thing to do. Yield curve moving up, steepening, bearish for equities. Monthly chart, 1 day left to go. Doji star formation, a sign of indecision. If we close out this month here or better, that would be a Doji star formation, and that is a sign of indecision. It's a tug of war between bulls and bears. And the trend, which is at current, a sideways consolidation with a bias to the downside, may just reverse, and that would be to the upside. Buckle up. It could be a very, very rocky June. Because Yellen, we went over this. I'll revisit the chart first that I shared out on Sunday night. Their general account fund in red is being drained rapidly. And remember, we're paying now roughly $1 trillion per year just to service the debt, not to pay down the debt, just to pay the interest on the debt. So they only have $720 billion or so left in that account. So it's going to be very, very difficult for them to continue to manipulate what they're calling Yellen's QE or Yellen's pivot. Yellen's pivot is fading. Liquidity drains from the system as Treasury issues fewer bills. We spoke about this on Sunday night. Risk assets will face a less easy ride as Treasury bill issuance falls and coupon notes, bonds, basic notes and bonds, treasuries. The yields are going to rise because there's less supply on the market. Nothing lasts forever. The Treasury tilted issuance guidance towards bills last year. Basically, she issued short, bought back long. So she was able to manipulate the yield curve, which has allowed the market to continue to rally despite the inundation of government debt. After reaching 23% in March, the bill's proportion of total debt fell back to 22.2 in April, the biggest monthly drop since March of 2023. The Yellen pivot is fading. What does that mean for investors? Liquidity is drying up because the Federal Reserve is still rolling off debt off of their balance sheet. And remember, during the last Fed meeting, he said, we're going to do $37 billion less per month of dropping off debt off of our balance sheet. He didn't say they were done. They're going to continue to roll off debt. And Yellen is running out of bullets. So tightening is becoming a major problem and is becoming reflective in the yield curve. We're going to see normalization here of yield soon, and that is not good for the equity markets. We're going to go over the 10-year yield in a moment. Now, this continues to be an issue that is growing more and more. It's like they prep the decks, they prep the narrative, they make it normalized. So earlier in the week, this was not the United States. We're not allowing our missiles to be used to attack inside of Russia, but we're allowing neighboring like Lithuania, their missiles, which they probably get from us or the Brits, to be used to shoot inside of Russia. What does it all matter? If NATO was attacked, we all need to stand by that member. That is an act of war. Denmark now says Ukraine can strike targets in Russia with Danish-supplied F-16s. So they continue to try to ramp this up with Russia because they don't want to pay attention to they don't want this piggy bank to end. That they are making so much money. The military defense contractors, Europe here, the politicians, they're making so much money they cannot afford to let it end. Besides the fact the prestige that we're going to lose is going to be disastrous, but it's going to end. It's going to end horribly. It's either going to end very, very bad, meaning the Ukrainian people will have suffered, along with a lot of Russians died as well, or it's going to end horribly, where you're going to have some sort of nuclear exchange. So that's what they're angling for. You have the Ukrainians now trying to target ICBM radar stations inside of Russia. So this is only getting worse. So we're looking at geopolitical risk on potential here. What does well when that happens? Precious metals, commodities, US dollar, and bonds. All right. So the headline of the evening clearly has to be Trump guilty on 34 counts in New York hush money trial. I'm not going to talk about this. I'm just going to stand by the statement of Rand Paul. I agree with this, and I'm going to leave it at this. First off, this is not good for the equity markets. I think this says it. How long can our republic survive once partisans have taken over the judicial process? The verdict will tragically undermine Americans' confidence in impartial justice. A sad day for America. I'll leave it at that. This is not, if it impacts the election, meaning if they put him in jail before the election, or if they try to keep him tied up in the courtrooms prior to the election, and he loses, I'll leave it to your imagination what's going to happen here, because these buffoons that have destroyed this country over the past 4 years, they will have a mandate if they get back into office yet again. That's it. I'm done talking about politics. So we also spoke about this the other day, and this is the top company's share of the S&P 500 has reached a new high record of 35%. NVDA alone has contributed 39% of the S&P 500 market gain year to date. The market cannot function without big tech. Great meme here. Very telling. The entire stock market, NVIDIA, and the problem is that NVIDIA, outside reversal bar today, NVIDIA is topping out. So I was tempted to go shorting NVIDIA today before it sold off. It was down about $10. I was going to short it, and I said, you know what? No. Yeah, PCE coming out tomorrow. Wait for that to come out, because what I think is going to happen is exactly what happened to the Qs and the S&P 500. We'll go over that in a moment. But we broke down today below this ascending wedge formation. We're probably going to get a retest. We're probably going to hook up yet again, and on any fade, I will then short NVIDIA. We already have short positions on the Qs. Today was a great day. We added more to the SQQQ after hours last night. SQQQ was up 3.41%, and I think we're going up higher. The banks. All right, so the banks, U.S. regional bank deposits recently made new highs. That's a good thing. It hasn't been that way for a while. Exceeding the prior level of SVB. That's that regional that failed last March. But that's far from all clear. Exposure to commercial real estate continues to rise and delinquencies on the underlying loans is mounting. Hold to maturity bank portfolios are losing money as yields rise. This is why the banks buckled last year. They're on life support by the Federal Reserve. They don't talk about it anymore, but they're on life support. While small bank shares were weakening, significantly underperforming those of larger banks. Those conditions also preceded SVB's bankruptcy last March. So this is the KBW versus the KBW regional banks versus the KBW large banks. And the large banks clearly outperforming. The regionals caught a bid last month, but that has since faded. And when you take a look at their book of business, I mean, unrealized losses on U.S. banking system has increased to $517 billion in Q1. Look at this. These are all underperforming loans that are sitting on their balance sheet. Losses, unrealized losses. Now, what many of them are doing is they're taking these loans and they're giving them to the Federal Reserve, who has been giving them collateral at par, basically dollar for dollar, as if they weren't a loss. The taxpayer is bailing out the banks. That's exactly what's happening right now. So you still have a lot of shadow debt out there. They can hold them to maturity, and they just fade away. But that's going to take a long time. They did not stagger out. They went out 30 years at what, 1%? That's craziness. That's crazy town. But they were forced to, many of them, but they didn't structure those portfolios well. So let's talk about the weekly charts and how we're poised to close out the week. Michael Anthony, how about what I'm saying about Path? I'm talking about Kathie Ark. I know zero about the company except that it's under distribution. The chart looks like hell, and she had no business, in my own personal opinion. She had no business. I think she's a very, very decent individual. It's seemingly that way, but when it comes down to technical analysis, she doesn't have any. If she looks at the chart, she has no talent. If she doesn't look at a chart, she should hire a technician. I mean, it's just profoundly bad, the performance of her funds and when she buys her positions. I mean, what is it, ARKK? Look at this train wreck. This is a month. Let's go to a monthly chart. This is a train wreck. Here, let's do this. Price performance. Oh, you know what? Wrong one. Sorry about that. Price performance. So I had the QQQs up here twice somehow. Let me get rid of that. So the Qs, I see. Oh, interesting. I didn't know they did that. Let's get rid of that. So the Qs are dramatically outperforming the ARK funds. I mean, by a ridiculous amount. And it's a basic index. Here, let's mess around. Let's play with IWM. IWM outperforming the ARK fund. I mean, it's crazy town. She needs to realize some losses over there and hire a technician. All right, let's talk about first comments. Yeah, it seems as if that they are dead set on it. I mean, all these hundreds of thousands of people dead for what? For what? And they run this country. They run the world. Dead. All these hundreds of thousands of people. Lives destroyed. Country destroyed. And they want more. These are demon people. All right, let's talk about the VIX. Volatility. Huge breakout this week on the VIX, up 21.29%. Going into the week, I warned about this on Sunday Night Futures Live. We had a descending wedge formation, and there was a very good possibility that we would break out. That's how generally these get resolved. Sometimes they'll break down below this lower band of support for a couple of bars, and automatically they go ripping right back up again, because it's like that rubber band got pushed or pulled too far wide, and you get a reversion to the mean. And then when you get that reversion to the mean, shorts begin to cover and they take it up higher where it should have gone anyway. So volatility rising here. Let's take a look at how we look on the month, because we only have one trading day left to go. If they close it above 15, that would be bullish for VIX right now, men's and men's. Daily chart. I think they killed volatility today. Oh, bounce back. Yeah, they took it down earlier in the day. They bounced it back, though, up 1.33%. So this is the one chart besides the yield curve that people need to worry about. This is the breakout. We spoke about this Sunday night again. Excuse me, Monday night we did it. Monday Night Futures Live this week. Abbreviated week. We have a breakout. Continuation breakout on the 10-year yield. Daily chart. We saw a filling of the gap, a retest, look for consolidation. And if the Federal Reserve doesn't intervene at some point in time, Treasury's running out of bullets, yields will go up. If you have the Federal Reserve that slows down the rate at which that they are dropping debt off of their balance sheet, that will help. That will help keep rates from going up a little bit, somewhat, but not stop it. Now you have Janet Yellen, who's been doing her own Operation Twist, issuing short-term debt, buying long-term debt. If that comes to an end, then you get a steepening of the yield curve and things get real fast. There needs to be intervention soon. Bitcoin, we watch this because of it, to see whether or not it will trade with the markets as a risk on or off vehicle, or will it be a safe haven play like gold is when the markets begin to sell off? We're not seeing that quite yet, that it's acting as a safe haven play. I mean, the equity markets is down on the week. This is pretty much, it's down slightly, but not exactly what I would like to see. To be fair, though, gold is not doing well this week either. So we'll watch it and keep an eye on it as a store of value. TLT, 20-year bond ETF. Bonds are in a bear market. You take a look at a quarterly chart here. You could make the argument that we are trying to put in a higher low. That's okay, but the quarter isn't over yet. We'll see how we look a month from now, and we will look to see whether or not we get a breakout on the TLT, and that will set. If we get a breakout on the TLT, yields go lower. If we break down, yields are going up higher. Tips: they took them down early in the week. These are Treasury inflation protected securities, bounced off of support, still closed down on the session. Daily view. A gap up. I still wouldn't touch these. The dollar. The reason why I wouldn't touch them is that yields are still moving up higher. Weekly chart breakout, continuation breakout. Weekly chart US dollar. Dollar got killed today. The however is on a weekly chart, we're still breaking out on a weekly time frame. One trading day left to go. Now, on a daily time frame, we had the second breakout point failure. If you didn't understand what I just said, that was my Brooklyn coming out. I said breakout point, breakout point failure, also known as a bull trap on the US dollar. What does that mean? So what that means is that we broke out here. On April the 30th, exactly 1 month ago to the day. Look at me, how smart I am. Then the following day, we tested support, looked good. Then the following day, we failed and failed horribly. Fast forward to the 29th of May. We broke out yet again. What do we do today? We failed again. This is a sign of weakness, a very weak event. So I'm not going to be the least bit surprised to see if the US dollar fails to hold the weekly breakout point. Why? Euro is flirting with a breakout. It pulled back today, it looks like, but it's flirting with a breakout above this resistance level. Let's take a look at what we did today. Yeah, we gapped down today. Actually, I'm sorry, we gapped up today, but we gapped down yesterday. Because I knew earlier in the week we were looking bullish, but we gave some of that back. So let's see how this behaves, whether or not we get follow through overnight. As for the yen is up. Now, I've been saying for a while that for the US dollar to break and break hard, you need to have the euro and the yen rallying together. Without both, it's very difficult without both of them to keep the dollar down for any length of time. Both of them need to rally together. The Japanese are seeing a tremendous amount of inflation, and they need to raise rates. Once they raise rates yet again and get things right, expect the yen to rally. In fact, we have a bullish reversal week so far, one trading day left to go. So we'll see whether or not we get a higher low here. In fact, let's do this. Let's modify this chart because this chart really matters. So here's our new higher low on the yen. Does this get resolved up? And if it does resolve itself to the upside, is the euro following suit? If that's the case, where do you want to be? Where do you want to position yourself? You want to be positioned in commodities, gold, silver. I don't care if it's soybeans. I own soybeans. Soybean meal, not meal, oil, believe it or not. Anything that you drop on your foot and it hurts, you want to own real assets. Because if you think inflation is bad now, wait until the dollar drops and the imports come in and we have to pay for those imports with a weaker US dollar. We ain't seen nothing yet. The dollar's been helping us with inflation, not hurting us. If the dollar drops, all bets are off. You're going to want to buy American. We did volatility, Dow transports. I mean, bad. We're down nearly 0.75% on the week. Yeah, I've been saying this for quite a while that this is either the greatest consolidation in the history of the world, or this is the biggest rounding top in the history of the world. So I thought we were going to get resolved to the upside here once the Dow Jones Industrial Average broke out, because you have the Dow theory. They're supposed to confirm each other. They never did. Dow Transports peaked out months ago. I think it was back in February. You want to actually they peaked out back in August, July of 23. So nearly a year ago. Think about that. A year ago, the Dow transports stopped going up, and they've been in a, I won't say a bear market. They went into a bear market, they recovered, fell into a consolidation, and they're not broken yet, but God forbid, God forbid we take out the lows of October of last year. Look out below for the Dow transports. And that's telling you a lot more about this economy than simply the transportation sector. Now, here's the Dow Jones. This was a year ago. The transports peaked out here. Look at where the Dow Jones is now. The transports never confirmed this move up on that Dow Jones Industrial Average, and now you're seeing it break down. Look at momentum as measured by stochastics, as measured by RSI, rolling over. I will say this, because we're not all doom and gloom here. We want to stick to fact. Volume. Very, very light this week. Very light. So that makes me want to take a look at a daily chart to see how we closed out the day. Is something setting up here? We closed right at a support level. I don't know. We're way too close to the April lows for my taste. Volume rose today. So on the week, we have declining down volume versus last week, but on the day, we saw volume rise today. So we had some institutional distribution today in the Dow Jones. SPY, weekly view. I spoke about this many times now. We broke down out of a wedge formation on a daily chart. We have now done it on a daily chart, a weekly chart. So this is what happens when you have an ascending wedge formation. Normally, they get resolved down. That's why it pays to take your crayon out, draw your trend lines, and understand where you are in that ascending wedge formation. Daily chart. We haven't hit support yet. We closed down below the 20-day moving average. Volume anemic, though. Let's go to the closing price action. 30-minute view. Wrong chart. Yeah, so they sold it off into the close. A little bit of buying, though, to be fair, to bid it off the lows. But look at the volume here. But I bet you some of that was buying. Let's drill down further. We don't want to be doom and gloom. We want to be fact-based. What are we looking at? Yeah, so we had some buying in the final 10 minutes of trade on massive volume. So you did see buyers move in here at the final minutes of trade. Now, DELL is not likely to take down the entire stock market. Costco, they had decent earnings. They were extended. They pulled back. Not a big deal. Triple Qs, weekly chart. We're right at the precipice. 450 is the precipice. Where do we close? 451.55. How's volume this week? Very, very light volume. You know, I'm short the Qs. It doesn't make me feel good to see very, very light volume. Daily charts. Here's the break. So this is what I mentioned about last week. You had that Thursday breakdown 1 week ago today. Outside reversal bar. Then they try to lure you back in. They want you to think one-day event. Come back in the pool. Come back in the pool. Oh, no. Lifeguards away. Smashed. No volume. Let's check out the quality of the close. You know, they were killing it. The buyers came in at the final minutes of trade. I think this still gets resolved to the downside. I think we go lower. 450 on Trip Qs. Technology, weekly chart, down 2.5% on the week. Not an outside reversal bar, but a bearish reversal bar. If you're not familiar with the terminology and you're new, link below, 5-part video tutorial, my top 5 favorite candlestick patterns, free. SMH, bearish key reversal on the week, down a little over 0.75%, thin volume. Let's go to the daily view here because it's the semis that are holding everything up. Yeah, so they're rolling over. I mean, Texas Instruments had a huge reversal bar the other day. Right here. They negated it, filled candlestick, dropped it. LABU, biotechs, holding support. They bounced back a bit today, or this week, I should say. Yeah, they closed up 5% on the day. Something to think about. The one thing you got to worry about with LABU, and I mentioned this about Kathie Woods, these moving averages matter. They matter more to me when I see the 50-day acting as a threat. 50-day in blue, 200 in red. If I see the 50-day threatening to take out the 200-day moving average, I want nothing to do with that issue. I want that matter resolved. Either the 50-day hooks back up or crosses down below, and we look to short the darn thing. Now, right now, this is in no man's land. That 50-day moving average is going to act as a declining resistance level. So I'm interested here. I don't want to put money to work yet, not until we close above the 50-day moving average and the 50-day flattens out and or hooks up. Now, Kathie Woods had that opportunity to identify this as well with path. Look at where the 50-day moving average was relative to the 200-day moving average here on the 28th when she bought the shares. So we're trading down below the 50 and 200-day moving average with what they CNBC likes to call the death cross to get viewers watching. You have the so-called death cross, the 50-day crossing down below the 200-day moving average, probably the most bearish events to occur in technical analysis, and she buys 450,000 shares. Sorry, I has me completely ticked off about. I've seen this well more than one time with her when she's done this. That's people's hard-earned money she's putting to work, or supposedly putting to work, putting into vapors. XLP, weekly chart. Holding the lower band of support. XLP is the consumer staples. Daily view. Up today, not ready to buy here. We owned Philip Morris. Well, I should say that Altria, sorry. MO the symbol. And we sold it. The ex-dividend date here is 6/14. We'll be looking to put what the shares that we sold, we still own some, putting the shares that we sold back on before that ex-dividend date to capture that dividend, which at current, which is my basis cost, is 9.25 and now higher when I buy back in. But if you didn't own the shares prior, you're going to get paid out 8.63%. If you own the shares on the ex-dividend date of 6/14, fact check me to make sure I have that right. Consumer discretionaries. Lagging, but holding the lower band of support. I think this is going to break. I think it's going to break. Emerging markets down 5.42%. This is with China. Let's take China out. Yeah, ex-China, emerging markets are doing far better or doing less worse than with China. Energy. Pulling back, retesting support. We own some energy here. But if this market goes, we will be dumping. We'll buy back in at a lower price. We're up today. Good. Crude prices. Stuck in a trading range. We are in a wedge formation. If the dollar breaks, there's really not a correlation as there used to be with oil and the dollar, but if the dollar breaks, I think that'll put a bid under oil. I think that's the dividend payable date, Franklin, not the ex-dividend date. You got to be the owner of record by the ex-dividend date. I think July 10th is the payout date. Could be wrong. I don't know everything. I don't have the numbers in front of me, but you may just want to double check that. Boil. Nat gas coming under a lot of pressure here. I see opportunity where people see blood in the streets. So I'm not a buyer here yet. We called the rally in Boyle, and I'm looking to get back in. Probably going to be selling some puts, using them to leg in to the long side on Boyle. Not quite yet, though. Gasoline prices breaking down. Good for the consumer. Gold. All right, so Bitcoin down on the week. Gold up 1.37%, and we're holding the lower band of support. What do we do on the day today? We eked out a gain there. Remember we were down earlier. So gold, stabilizing. Am I a buyer here? If I didn't own any, I would nibble here. I own some, so I'm not ready to buy yet. Not quite yet. Let's see what the dollar does. Dollar breaks, I'm a buyer of gold. Gold mining stocks, holding in there. Got to say that. Nugget up 1.35%. Impressive. Leave it off with silver. And silver, this is a leveraged product, up 4.62%. So respectable price action here in light of a dollar that's breaking out. So it really just all goes to tell you the underlying strength in the commodities market. And that is, even with the rising US dollar, these names are resilient. And if you would have shown a breakout on a weekly chart to me this time last year, versus gold, silver, gold mining stocks, whatever, you would have seen those stocks in free fall. Now, not much reaction. So that correlation, the inverse correlation, is not as correlated as it once was. And that's how intelligent the commodity markets are. The commodity markets are saying, we see you, the Federal Reserve, we see you, Treasury, we see you, Congress, you're spending way too much. We know that you are the cause of inflation. You blaming big corporations is not the cause of inflation. They are not the cause of inflation. They are reacting to the rise in prices due to the fact that you are spending way too much, and you must decrease the size of government. You must decrease the spending, and you must not cut rates. In fact, you should be raising rates, not cutting rates. That's what the commodities market is telling us loud and clear. Let's just play a game here, just so I can illustrate, because this is, I know from my demographics. Thank you. Yes, excellent. Thank you, Franklin. June the 14th, ex-dividend date. Great way to do a dividend capture. You could sell the shares the next day. So let's do this. Let's play a game. For those, let's say Nugget. Let's use Nugget, gold mining stock, everybody's favorite out there. Let's overlay the US dollar. Correlation. We'll make this above. We'll make it a pretty green, appropriate green. And we'll do some price action. We'll put that behind. And we will do that. And we'll turn that a pretty appropriate green. Let's take all of this off, clean it up a bit. So here, 2022, dollar on a rip. Gold mining stocks tanked. Dollar bottoms out here, July 2023, 1 year ago. Rips, gold mining stocks, hammered. Here, present day. Dollar, uptrend. Gold stocks, uptrend. Correlation, at current, a 65% correlation. So 65% of the times, they're trading correlated now. Look where it was historically. Every one of these blips here was a geopolitical event where you had fear driving up gold prices, driving up gold stock prices, driving up the dollar, driving up bonds. Most of the times, there's a highly inverse correlation between the two. So the market is saying, we see you. The commodities market is saying, we see you. We need to bid up commodities. We don't want to own fiat dollars. We want to own real stuff. So that's what we're doing here. If you want to learn how to do it, join the 14-day free trial offer. Let's do some chart requests, and we will call it a night. We have about 7 minutes to go. Folks, we're going to be using our friends over Trend Spider Automated Technical Analysis. Soybeans still dropping here. Now, soybeans, for those that trade futures, or you can buy SOYB, that's an ETN. Soybeans, this is how you trade seasonality. March through May, horrible, horrible price action. June, the best month out of the year. That's why we want to be long of soybeans. All right, let's do some chart requests. We'll take a few, and we will call it a night. Jeff, NVDS. NVDS. Oh, this is NVIDIA Barry, Jeff? Huh. These are crazy, man. Are these marginable? Did I let you margin these? Weekly chart looks really good. We're holding the lower band of support. Monthly view, no bueno. Daily view will pop higher. They're not optionable. This is a tough one. So, do I think it's going to go up? Yes, I do. I think it's going to go up. The however is that you're talking about NVIDIA. So I would calculate it out this way. You know, obviously, if you go out and you buy the shares, you'll make more money because you're long of a leveraged product if you're right in your directional call. And but the probability of making that money is less likely and probably more capital intensive because you bought July calls because it's saying that maybe stock charts has it wrong because it said an optionable no. Maybe they have it wrong. Wouldn't be the first time they got it wrong. Yeah, they have options here. So here's what I was looking at here. It said optionable no. Okay. So if you wanted to, did you do a call spread or did you buy the calls outright? Hey, it's fine. I would rather, what's this all about? A forward yield of 45.41, a forward dividend of $21.36. Okay. All right. So one thought for you, Dave, you can right now, if you try with PayPal, I'm gonna ask this all the time. You could give it a try, but it's still not fixed. I have a meeting with the product that I use is Member Mouse. It doesn't matter, but I have a specialist coming in to redesign the entire thing on June the 5th. So on or about that day, it should all be resolved. But you can give it a shot. I know PayPal has worked for one of our members. Stripe, which is your regular credit card payment processing service, has not worked. That's been a problem. So give it a shot and let me know if you have any issues. And I apologize in advance if you do. It's just been a problem. Franklin's offered to help me out, and I'm kind of embarrassed to do that. So give it a shot. But I'll let you know whenever. I'll make the announcement when everything's fixed. So getting back to Jeff's question, and thank you, Franklin, for your gentlemanly text. He reached out to me. Franklin, I always say Franklin the gentleman because he is offering to help. So I'm okay with if you're buying the call options. I like the risk reward entry point. What you may want to do is when you get the rally up higher, because I'm thinking optimistically for you. Once you get a little bit of steam running, suppose you get a rally up and into one of these resistance levels or up and into the 20-period moving average, which is declining. Maybe you want to think about selling a call. I'm not sure what delta you went with. Maybe you went with a 70 delta call to the upside today. Maybe you want to sell a 30 delta call once it gets up to one of those moving averages or book profits. Now, if you went with an out of the money option, then I would probably just let the money ride but I would book profits quickly once I saw any type of weakness, and I would know where my resistance levels were, and I would sell into that resistance level because you went with a option, July option, so you're going less than 60 days. That means that you're going to have time decay that's going to be working against you. So that theta decay can be a real SOB. So I prefer to go out 65 days or more to avoid that time decay. So that's what I would do there. But I'm okay with the trade. I think it's probably going to move up higher. All right, what else do we have? DBA. We haven't spoken about that one in a while. DBA. It's looking good. So when it comes down to agriculture, it's very seasonal. So I want to know what this has been doing on a seasonal basis. 17 years worth of data. May is the second worst month out of the year, but June doesn't get a lot better. I mean, it's up less than 50% of the times. So I would not rely upon this trade based upon seasonality. It's not a seasonality trade. That being said, You do have underlying names such as corn, breaking out monthly time frame. Wheat, you can see it right here, broke out above this upper band of resistance, pulled back off of its highs. Wheat, upward move, looks like a monthly breakout on wheat. Soybeans have been under pressure of late, but up on the month. On the day, bearish key reversal bar. I would be looking for an entry point on soybeans 24.96 because, as I started out with, the seasonality here is outstanding. Down three, well, it was not down three sequential months, but going back 13 years, March through May, horrible time of year. June, the best time of the year. So expect a ricochet event. So with these setups on the underlyings, soybeans, wheat, corn looking bullish, I think DBA goes up. Thank you, Sean. All right, folks. Thanks for being here. Have an awesome night and a profitable trading day tomorrow. I'll talk to you over the weekend.